Hello viewers, welcome to my channel. I'm Hashim. Last 3 videos I have explained you about capital gain theory. Now in this problem I am going to start the problems on capital gain. So remember, the problems are based on theory. So if you have not watched the earlier videos, theory videos, I suggest you go to the playlist of my channel. Select the subject income tax for the assessment year 23-24. Select the videos of capital gain. Be perfect about the meaning of the term capital gain. What are the different types of capital gain, long term and short term? What are the tax rates for long term capital gain and short term capital gain? What is capital asset? And what do you mean by transfer of capital asset? What will happen when advanced money is forfeited? What is called deemed capital asset? Like this, all special mode of transfer. All these things I have already explained. Be perfect on the theory, then you can start the problem. Now before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always, without having problems you cannot understand my lecture. So always keep it ready. Take the screenshot of the points which I have written on the board, then I'll explain. Now, see the first problem. Sri Sai Chand purchased gold ornaments for rupees 2,05,000 in the financial year 2001-2002. During the previous year, he sold the ornaments for rupees 10 lakh. Transfer fees 45,000. The cost inflation index in the year of purchase was 100 and in the year of sale is 331. Calculate income from capital gain. First of all, we have to see whether it is a capital asset or not. Yes, ornament are capital asset. So any gain arising from sale of ornament is a capital gain, taxable. Now you have to see whether it is a long term or short term. If the ornaments are sold within 3 years, that means within 3 years of purchase, it's a short term. If it is sold after 3 years of purchase, it will be called long term. So here it is purchased in 2001-2002 and current previous year is 2022-23. Our assessment year is 23-24. So previous year is 2022-23. So during the previous year 2022-23 he sold, right? So it's a long term because more than 3 years. He hold the asset for more than 3 years. It's a long term. So first in examination, first thing you have to write that the asset was held for more than 3 years. So gain arising is a long-term capital gain. Then indexed for all long-term capital gain, we have to calculate indexed cost of acquisition. So how to calculate indexed cost? Actual cost of acquisition into current previous year index divided by index of the purchase year. Index of the purchase year. Here it is given purchase year index is 100 and current previous year index is 331. So actual cost into 331 by 100 will get indexed cost of acquisition. My suggestion to all my viewers, always keep a notebook, calculator, pen ready while watching the videos. Whenever I explain some provisions, immediately note it down, otherwise you'll forget it. Because income tax is based on the provisions. You will get the marks if you write the right provisions. Now, the solution of this problem will be like this. First, you write the name of the assessee, Sri Sai Chand. Computation of LTCG, long-term capital gain for the assessment year 23-24. Now, format is very simple. First, we should take consideration received. This is the sale price. From consideration received, subtract transfer expenses, selling expenses. If it is given, we'll deduct it. Mostly it will be given. So less transfer expenses. Deduct transfer expense, will get net consideration. From net consideration, you have to deduct indexed cost of acquisition. So whenever there is a long-term capital asset, then you should take indexed. How to calculate? Just now I told you actual cost into index number of current previous year divided by index number of the year of purchase. Then we'll get LTCG. This is the format. Now, our sale price, the ornaments are sold for 10 lakh. So consideration received 10 lakh. Minus transfer expenses are given in the problem 45,000. So 10 lakh minus 45, 9 lakh 55 is the net consideration. From that indexed cost of acquisition. What is the purchase price? 2 lakh 5,000. So 2 lakh 5,000 into current previous year index 331. So normally always the index numbers will be given in the problem. Otherwise, for the current assessment year, current previous year 22-23, you remember 331. 331 is the current previous year index number. If it is given, okay. If it is not given, you have to remember 331 divided by 100. We'll get 6,78,550. This is the indexed cost of acquisition. Now subtract 955 minus 678,550, 276,450. This is the long-term capital gain. That's it. This is the first simple problem. Now second, Mr. Y.N. Charan sold his residential house for 30,50,000 on 10th August 2022. That means our current previous year he sold. Cost inflation index 331 directly given, which is purchased on 5/11/1988. Again one new point. If an asset is purchased before 1/4/2001, SSC can choose the actual cost or fair market value on 1/4/2001, whichever is higher, right? So he has purchased before 1/4/2001. At what price he has purchased? 1,02,000. Fair market value on 1/4/2001 is 8 lakh. So actually he has purchased for 1,02,000, but FMB on 1/4/2001 is 8 lakh. So he can select whichever is higher. 8 lakh is higher. And stamp duty value is 9 lakh. One more new point is given. Whenever stamp duty value and FMB is given, you have to consider the least of the two. Fair market value or stamp duty value, whichever is less, that will be taken as the cost of acquisition. So here fair market value 8 lakh, stamp duty value 9 lakh, whichever is less, 8 lakh is the cost of acquisition. If selling expenses are 53,000, transfer expenses 53, compute the income from capital gain and tax liability if income from other head is nil. So here we are required to calculate the tax liability also. I have calculated LTCG. Okay. Tax liability I have not calculated. We will calculate now. So first of all, Mr. Y.N. Charan, this is the SSC. Computation of LTCG for the assessment year 23-24. Consideration received. First you should write that the SSC sold a residential house and residential house is a capital asset. Is a capital asset. For residential house, the period of holding is 2 years. If the SSC sold the land and building, land or building or both, within 2 years, up to 2 years he hold, then the gain arising is a short-term capital gain. Short-term. If he hold the asset, if he hold the building for more than 2 years, it will be called long-term capital gain. Here he has purchased in the year 1988, very long back. So the gain arising is a long-term capital gain. Then the sale price was 30,50,000. So consideration received 30,50,000. Minus selling expenses, transfer expense 53,000. Subtract 29,97,000 net consideration. From this indexed cost of acquisition. Here two new points. First new point, the asset is purchased before 1/4/2001. So the SSC can choose actual cost or FMB. Here FMB is 8 lakh, right? And whereas actual cost is only 1,02,000. So ignore that 1,02,000. He will opt for 8 lakh. But apart from that, stamp duty value is also given. So whenever stamp duty value, take the lower of the two. Cost of acquisition will be lower of the following two amounts. Fair market value on 1/4/2001 8 lakh and stamp duty value is 9 lakh. Whichever is less, 8 lakh is the cost of acquisition. So cost of acquisition 8 lakh into current year index. The current year index is given in the problem 331. And when any asset is purchased before 1/4/2001, the index number should always be taken as 100. It will not be specified in the problem. It is given in the provision. Any asset purchased before 1/4/2001, the index number should be taken as 100. So 331 by 100, you will get 26,48,000. Subtract 29,97,000 minus 26,48,000, 3,49,000. This is the long-term capital gain. So it is also asking you to calculate tax liability. If an income of the other heads is nil, no other income he is having. He is having only this much income. Now you can calculate tax liability 20%. So 20% of 3,49,000. So I'm calculating right now on the calculator itself. So 20%, 3,49,000 into 20%. It comes to 69,800. So 69,800 is the tax. 69,800. 20% of 349,000 plus surcharge. The surcharge is 4%. So 69,800 into 4%, 2,792. 2,792. So if you add up, it will become 72,592. The tax liability is 72,592, but you have to round it off to the nearest 10. So ignore 2 rupees. So it will be 72,590. This is the tax liability. I have not written, you write it in the notebook. How to compute the tax liability. That's it. This is the end of problem number 2. Now I am moving to problem number 3. Srimati Ganga Bhavani purchased a residential house for rupees 5 lakh in 97-98 financial year. Again, it is purchased before 1/4/2001. During the year 2003-2004, she constructed 2 more rooms at a cost of 2,18,000 on 15th May 2022. So during the year 2000, that is different one, 2,18,000. So there is cost of acquisition and cost of improvement. She has purchased the house in 97-98 for 5 lakh. And during the year 2003-2004, she has constructed 2 more rooms. It is called improvement. So here we have cost of acquisition and cost of improvement. Cost of acquisition was 5 lakh and cost of improvement is 2,18,000. On 15th May 2022, that means current previous year, she entered into a contract with Dr. Hari to sell the house for 22,30,000 and received 75,000 as advance. Later on, Hari decided not to purchase the house and the advance received was forfeited on 12th December 2022. One event happened. So during the current previous year, Srimati Ganga Bhavani, SSC, she has entered into a sale agreement with Dr. Hari to sell the house for an amount of 22,30,000 and she has received advance money of 75,000 also. But Dr. Hari was not in a position to make the full payment, so he has declined to purchase. That means sale deed was cancelled. In that case, there was an agreement that whatever advance money he has paid, that will be forfeited. Now, Ganga Bhavani, the SSC, she has forfeited 75,000 advance money. In the theory video, I have explained you. If any advance money is received by the SSC and forfeited, it will be treated as income from other sources if the advance money is forfeited after 1/4/2014. 1st April 2014, after this date, if advance money is forfeited, it will be treated as income from other sources, not as capital gain. So this 75,000 should not be considered while calculating capital gain. It should be considered in income from other sources. That is a new point. And she sold the house for 30 lakh. Now, during the current year, she has sold, ultimately the house was sold to another person for 30 lakh. Selling expenses are 2%. Calculate the income from capital gain and tax liability if income from other heads is 6,30,000. And cost inflation index for 2003-2004 is 109. And 2022 to 23 is 331. Current previous year is 2022-23, 331 index. And the improvement was made in 2003-2004. So at the time of making the improvement, 109. And the purchased house was in 97-98. So we'll take the index as 100. So cost of acquisition 100, cost of improvement 109, and current previous year 331. That's it. Now, Srimati Ganga Bhavani computation of LTCG for the assessment year 23-24. Consideration received 30 lakh. Finally, she sold the house for 30 lakh. Consideration received. Less transfer expenses 60,000. 2% it is given. So 2% of 30 lakh, 60,000. Subtract 2940. This is the net consideration. Now the new point is we have cost of acquisition and cost of improvement. First we'll take cost of acquisition. Indexed cost of acquisition. The actual cost of acquisition was 5 lakh. In the problem, FMB is not given. If fair market value would have been given, we would have taken that. But FMB is not given. So directly we'll take the actual cost. 5 lakh into 331 divided by 100. Because the house was purchased before 1/4/2001. So 100. So it comes to 16,55,000. Now indexed cost of improvement. She has made the improvement to 2003-2004. Amount is 2,18,000. So 2,18,000 into 331 divided by 109. In the problem it is given the index number for 2003-2004 is 109. So 6,62,000. Take the total of indexed cost of acquisition and indexed cost of improvement. It comes to 23,17,000. Subtract. So 2940,000 minus 2317, you get 6,23,000 as LTCG, long-term capital gain. Now it is asking you to calculate tax liability. See here, this SSC is having two incomes, normal income and special income. Normal income, slab rates will apply. On special income, flat rate will apply. This LTCG is a special income on which there is a flat rate of tax 20% separately. Whereas income from other sources is a normal income on which slab system will apply. So first we calculate normal incomes. Income from other sources given in the problem 6,30,000, that is given. And apart from that, advance money received and forfeited, that is also income from other source. So advance money forfeited 75,000. So total normal income is 7,05,000. Now special income is LTCG. How much is LTCG? 6,23,000. Both the income should not be added because separate rate of tax we have. So first we calculate the tax on normal income. Computation of tax liability. Tax on normal income. Slab income rate tax. The first slab is 2,50,000. That means the basic exemption limit is 2,50,000. So up to 2,50,000, income is 2,50,000, rate nil, tax nil, no tax, up to 2,50,000. The second slab goes from 2,50,001 to 5 lakh. From 2,50,001 rupee to 5 lakh, the income comes to 2,50,000, right? On this, the slab rate is 5%. So 5% of 2,50,000, 12,500. These rates you have to remember. Up to 2,50,000, zero, no tax. From 2,50,001 to 5 lakh, the income comes to 2,50,000, on which 5%. Then next slab is from 5 lakh 1 rupee to 10 lakh. But our income is not going up to 10 lakh. Our income is only 7,05,000. So we'll take the balance. The third slab will take the balance because our income is not going up to 10 lakh. Our income is stopped at 7,05,000. So 7,05,000 minus 250,000 minus 250,000, the balancing figure is 2,05,000. In other words, 7,05,000 minus 5 lakh. The balance is 2,05,000. On 2,05,000, 20%. First 0%, then 5%, then 20%. So 20% of 2,05,000, 41,000. Now take the total. 12,500 plus 41,000, 53,500 is the tax on normal income. So tax on normal income 53,500 plus tax on special income LTCG 20% of 6,23,000. It comes to 1,24,600. Now add up both the taxes. The total tax is 1,78,100. We don't have any surcharge. Surcharge will be added only if the total income exceeds 50 lakh. Our income is not exceeding 50 lakh. So that's why no surcharge. Directly we'll come to health and education cess. To add health and education cess, 4% of 1,78,100, 7,124. 4% fixed. Then add up 1,85,224 is the tax liability. But one provision is there, rounded off to the nearest 10 rupees. The last 4 rupees are there. Just ignore 4 rupees and make it 220. If it is 5 rupees, we would have taken as 230. Next 10. That means after 20, the next 10 is 30. If it is 5 and more. But if it is less than 5, ignore the fraction. So here 4 rupees ignore. So 220. 1,85,220, that is the tax liability. That's all. So 3 problems I have explained. Now I am coming to the 4th problem. Sri Jai Prakash purchased a sculpture on 25th June 2001 for 2,50,000 and is sold for 11 lakh during the previous year. Selling expenses 10,800. Calculate capital gain in the following 2 situations. First, situation 1, if it is sold to Mr. Ravi Teja of Haryana State. Second situation, if it is sold to Jawaharlal Nehru University, Delhi. The first new point is the SSC is having sculpture. Remember, paintings, drawings, sculpture, these are also capital asset. These are also capital asset. And this sculpture, painting, drawings, if it is sold and gain arising, it's capital gain, taxable. So one by one situation will take. So in examination, first you should write the sentence. Sculpture is a capital asset and gain arising on sale of sculpture is a taxable capital gain. That point to remember. And it is held for more than 3 years. More than 3 years. So it is a long-term capital gain. Right? The first situation, if it is sold to Ravi Teja of Haryana State, an individual person, he sold. So how to compute? Sri Jai Prakash, computation of LTCG. Here situation 1 I have not written, but you should write down. Situation 1, if it is sold to Ravi Teja of Haryana State. Then consideration received 11 lakh. Minus transfer expenses 10,800 given in the problem. The net consideration 10,89,200. From that, indexed cost of acquisition. So he purchased it for 2,50,000, right? Into current previous year 331 divided by purchase year index 100, right? So 8,27,500 is the indexed cost of acquisition. Subtract 2,61,700. This is the LTCG, long-term capital gain in situation 1. If the sculpture is sold to a person in Haryana State, then this would have been the long-term capital gain. Second situation is if it is sold to Jawaharlal Nehru University, Delhi. In that case, Income Tax Act has given the provision that if painting, drawing, sculpture, etc. are sold to government or any university or to any national museum, it will not be considered as transfer. It will not be considered as transfer, so gain arising is not taxable at all. So second situation, if it is sold to Jawaharlal Nehru University, it is not a transfer, so gain arising is not taxable capital gain. That's it. So totally 4 problems I have explained you in this video regarding how to compute the capital gain. So inshallah we'll continue the next problem in the next